Nigeria's headline inflation rose by 0.26 percentage points to 12.82% in the month of July. Latest figures coming in from the Nigeria Bureau of Statistics there. Ayodeji Ebo, the managing director of Afrinvest Securities, now joins me from Lagos to discuss the trends behind Nigeria's July inflation data and, of course, also for a focus on Nigeria's equities market. Ayodeji, a pleasure to have you join us for this conversation on Closing Bell West Africa. For you, what were the main points from the report that the NBS published just at about past noon in Lagos?
Okay, thank you. Interestingly, it's in line with expectation because we were all anticipate that there would continue to be pressure on prices, and but so when you look at it on a month-on-month basis, we saw that was about 1.25% increase on a month-on-month basis, which we significantly higher than about 1.2% last month. And the major factor that drove the inflation rate to that level is food inflation. So we've continued to see that uptick in food prices. Food inflation settled around 15.2%, and there was, I think, about 2.4% month-on-month increase. And when you look at the most of the classes of food that even pressured inflation, food inflation, cereal and bread took the top, which you can easily trace to because of the lockdown. Schools are also at home. There's been significant demand for that product. But as a result of when you look at how do they manufacturing of this product, FX challenges will be a problem, and also the supply disruption. So that has pressured um, has continued to pressure food inflation. But the surprising bit here is the core inflation. Um, yes, core inflation remained flat around 10.12%, but we are yet to see that transmission effect of the FX illiquidity because most imported goods now, most businesses that rely more on dollar have had to resort to the parallel market, or what we call the black market, which has over 100 naira spread relative to the official CBN rate, or the I and E window, that's the investors and exporters window. So by and large, it's in line with the expectation. We would see that continued uptick. Food inflation may subside a bit when, by the time we approach the harvest season, maybe from October, we may begin to see that month-on-month increase reduce a bit. But there, when you look at a lot of the disruptions, supply disruptions, that will continue to pressure prices. And even from the government side, cost of doing business have continued to increase, and there have been a lot of multiple, in quote, multiple taxes that are also being applied on on goods and services, which is being passed even to the consumers.
Ayodeji, I'm just going to attempt to dig deeper on the surprising figures that came out from core inflation, like you mentioned. Is there any singular element that we need to begin to pay attention to as the key driver of this marginal drop that core inflation recorded month on month?
Yeah, I think what like the major driver for core inflation for this month was I think it's health services, which we know that there's also demand, and we also import a lot from that. Maybe the only explanation that we may one may get, even dig further to look at it, is are they able to are they able to uh, are they able to access dollar at the rates, are they able to access dollar at the official rate that is not pressuring prices significantly? But beyond that, we feel that as we progress, that transmission mechanism, exchange rates and distortion would also impact on would impact significantly on core inflation as we progress. So medical services, hospital services, and passengers transport. You would recall that because of COVID, to make arrangements for most of the airlines to be able to also fly, they had to increase prices. So that also affected core inflation, but we are not seeing that month-on-month jump in core inflation.